So the end of year is almost here, and this is your official reminder. For some of you, it's time to take your required minimum distribution. If you don't before the year end, you could suffer penalties. Unlike last year where there was a holiday and we didn't have to take required minimum distributions, this year you do. So what are RMDs? Required minimum distributions. That's the amount that you need to take out on an annual basis at a minimum so that you're withdrawing properly on your retirement account. Could be your IRA, your 401k, your simple, not your Roth. There's no required minimum distribution on your Roth. What happens if you don't take your required minimum distribution? Well, the IRS will impose a penalty of 50% of whatever that required minimum distribution was. That could be steep. If you are supposed to withdraw $24,000 a year from your account, that's a $12,000 penalty. So this is not a mistake you want to make. So you know what your RMD is. Is that necessarily the amount you should be taking? In a year where your tax bracket is lower for unforeseen circumstances, let's say your investments in the stock market didn't do as well, or one of your partnerships didn't pay the distribution it usually does. Well, you might want to consider taking a bigger distribution than the required minimum distribution. The idea with year-end tax planning is to figure out how you can have as much of your income taxed in the lowest tax bracket possible. Another thing to consider is if you're a wealthy individual, high net worth individual, is this retirement account money you really need, or is it something that you'll outlive and then you'll end up leaving to your kids or someone else? Well, when you inherit an IRA, the person who inherits the IRA pays taxes on it, and a lot of people are unaware of that. So you really do want to draw down your income, your retirement income, retirement account during your lifetime, and leave that tax-free money, that cash that's in the bank or in the stock market, leave that alone and draw down on your IRA. So that's something that people should consider. Sometimes it makes more sense to take more than the required minimum distribution. Why retirement planning? Why is it a good reason to discuss retirement planning before year end? Actually, discussing retirement planning at any time is a good time to have the conversation. The one qualifier is that you're allowed to set up some retirement plans before, even as late as the last day before you file your tax return. But knowing what your taxable income is by year end, and then figuring out if a retirement account works for you or how much you can actually contribute, given the circumstances of the year or your profit, that's a conversation you need to have before the year ends. So message us, give us a call, set up a time for a Zoom meeting, whatever it takes. The conversation might only last 30 minutes, but it might save you thousands of dollars.